Hello everyone, let me know if you could see my screen. Okay, great. Yes, let's get right away one question out of the way. Is this session being recorded? Yes. Will you be able to receive this recording? Yes, you will. We will upload today's session to YouTube, and you could email us at wyckoffAssociates@gmail.com, and we'll gladly send you guys the link. We also will be sending out a general email with the link, so you don't have to email us, but if you want to, if you don't receive it by tomorrow morning, by all means, contact us. All right. January 2nd, 2019, session number 1, episode 129 of the Wyckoff Market Discussion. Bruce, good to hear your voice. Good to see that you're here, and Happy New Year.
Happy New Year. I'm a little startled. It's 2019.
Yeah.
So this is kind of a rude awakening.
Yeah. So, and we're starting the new year. This is the first class at our Wyckoff School, and we have an exciting offer for those of you who are joining us. And usually our first session of each cycle is free, complimentary webinar. And today we have a special offer, a promotion, $79 per month. That offer is only available to those of you who are new to Wyckoff Market Discussion. And you have only 1 week to sign up before the next session, which will be next Wednesday on the 9th. Bruce, what is, in your opinion, the best value and the best benefit to a student who comes to us and listen to our broadcast?
Well, for me, I believe that the real advantage of the Wyckoff Market Discussions is that we are operating real time in markets from a Wyckoffian perspective. We are attempting to make the best entry decisions at the best time for the maximum move, and using all the techniques that are available to us. And I wish I'd had this when I was starting out, because to me this is like a mentorship program. Mm-hmm. And I love that. I had such great mentors through the years, and to have a way to be able to offer this mentorship notion in a setting like this, where we can have this wonderful group, the Wyckoff Nation, our people, and be able to have them submit their work and be able to help them with their work, is something that was just kind of not available, at least to me early on, until I found the right people. And so mentorship's important to success in financial markets.
Sounds great. So guys, for those of you who are new to our WMD offering, please go to our website, wyckoffanalytics.com. Under the Wyckoff Market Discussion, please sign up. For 1 week, we're going to have this promo. For those of you who are current student and you guys on a $99 monthly subscription, we're going to automatically switch you to $79. We do this every time for those students who join between promotions. And during the promotion, we usually get your price in line with the promotion. So don't worry about this. You don't have to do anything. PayPal will send you a notification. In the upcoming events, Bruce, tomorrow you're going to be on the Market Watchers Live on Stock Charts TV at 9 a.m. Pacific. What's going to be the topic of discussion?
It's titled Risky Business 2019, and it's a discussion that's at a very basic level, a foundational level for new Wyckoffians and people that are not Wyckoffians about risk management and how to manage an environment like this. And so I think there might be some things here that possibly people haven't heard before, but I would think that the people in our group have heard a lot of what I'm going to talk about. I am going to get into some areas of the market maybe that are a little different than what we're talking about today. So there might be some interesting charts that I'll have for you tomorrow that are in addition. They're, like I said, they're basic and they're foundational, but it should be fun. And I hope that you all can join me, because it really helps me when I know that you all are there. So.
And we will, Bruce. Definitely let's support Bruce tomorrow, 9 a.m. Pacific. Go to stockcharts.com, and on Stock Charts TV, their feed is live. So let's just see what Bruce has for us tomorrow. Next Monday at 3 p.m., I'm going to be conducting the first session of the Wyckoff Trading course, which is always a complimentary webinar. So I talk a lot to you guys in this class, especially to those of you who have not taken Wyckoff Trading course, that it's kind of like a foundational knowledge on Wyckoff method, where we discuss the price structural analysis, we discuss labeling, we discuss phase analysis, then we switch to supply and demand analysis, we go through the volume spread analysis, swing volume analysis, and then we switch to relative and comparative analysis, and then we talk about tactics and the trading plan. So it's a very comprehensive course, which I suggest that you take in order for you to feel comfortable within discussions that we have here. Because usually this is the venue for us, for Bruce and I, and you guys, to talk about the loss bar analysis. And obviously we are going really fast. We're not going into the basics of the concepts. So for those of you who would like to learn those concepts or upgrade your knowledge, obviously I would recommend a Monday session. So go to our website, sign up. For those of you who have taken this course, Wyckoff Practicum, where we do a lot of drill exercises, we're going to have the complimentary webinar as well. This is only for the WTC alumni. That's going to be on Tuesday, next Tuesday at 3 p.m. as well. And Bruce, this is very exciting. TSA SF is kind of like waking up, which is really great to see. And we're going to have a complimentary webinar with Joe Turner. So tell us about that.
This is our first webinar of the year, and we're going to do, we do a combination of live events and webinars. We're doing this to raise your awareness to the TSAA. TSAA is the oldest technical society in the country. It's a not-for-profit organization that's oriented towards technical analysis, education, technical analysis, dissemination of new ideas. It's a great group. We're going to have just great events every month, all year long. And the first one is going to be with Joe Turner. Joe Turner is my old business partner. I've known him forever. He's probably my most important mentor, he and Hank Pruden. And Joe is a absolute brilliant student of the business cycle. And so he has done a remarkable job of developing the business cycle into a model that can be used for making decisions, allocation decisions in the stock market, in the bond market, in commodities, inflation, etc., using the flow of business conditions. And it's just amazingly good work. And I don't think there's a better model builder for stock market decision making and for bond market decision making on the planet than Joe Turner and his partner Martin Pring. And so the two of them are really dynamic. This is part one of a two-part presentation. The first part is going to be here on January 10th. It's going to be Joe Turner and myself, and we're going to have a discussion. He's going to introduce and present on the business cycle and what he expects in 2019. Part two is going to be in February, and we really encourage you to become a member of the TSAA. The membership is only $75 a year, and all of this is included in that price. And so we have a great lineup for the first quarter, and we're going to have a great lineup for the whole year. So we hope that you will consider attending this webinar, and then also to consider joining the TSAA. So this is going to be a good start.
Sounds great. So let's finish this up. One more announcement for those of you who already students of this class. As you know, we post all of the videos into the Dropbox, and for each year we have a new Dropbox folder. So we will contact you tomorrow, and we will send out a Dropbox invitation to the WMD 2019 folder. So please make sure that you receive that. If you don't, contact us. We'll send it to you again. And most likely that's going to happen within the next 2 days. All right, sounds great. Let's get to it. Let's discuss the markets. Bruce, timer, 27.
Thank you.
1, 2, 3. All right, well, let's look at the US markets. And we're looking, as always, at 4 markets: S&P, the Dow, NASDAQ, and Russell 2000. And here we are going to start with where we left in 2019. I believe that we were last talking somewhere here at this spot. And we have said that this particular area was a confirmation of the break to the downside. We have committed below the local support, and we also started to commit below the support that was formed back in February, March, April. And that obviously confirmed a downtrend or a down bias. And we said that most likely we're going to have acceleration of the price to the downside on the background of the accelerating volume signature increase, where we're thinking that supply is going to increase, but at the same time, going below the support is going to create some kind of value for institutions, and they're going to start buying, and we see that in the volume signature. So that increase in the volume signature right here suggests that there is some buying. The next bar shows somewhat of the exhaustion, and obviously this is all related to the holidays, to Christmas, but still, if we would just interpret volume and spread signature, that's how we would be thinking about this. And we said that most likely we're going to have some kind of climactic stop in action. We definitely experienced that. All of the elements of the climax are there. Increased volume signature, acceleration to the downside, increased spread, stop in action by itself, and we are definitely in the oversold condition here. We're looking at the down trend that we have had since the upthrust, and we are definitely in the oversold, and this is where we are expecting climactic action to occur. So what would happen after the climactic action? Well, out of the oversold condition, we usually have some kind of bounce. So the biggest question for today's session is going to be what kind of bounce we're going to have, what kind of quality of the rally we're going to have. And also we're going to talk about a possible discussion of what should come next. Are we going to have another trading range? Are we going to have potential rally, or could we collapse from here and continue to the downside? Bruce, so what's your overall bias theme right now when you look at the markets in general? What is the predominant thought that you have about the bias?
Well, the concern that I would have is that we have had this major fourth quarter event that has taken these indexes down and out of their range-bound condition, out of their trading range. And this is a major action by the market. And this has come with the force of the expansion of supply. And so my concern is, does this market have the ability to be able to lift back up into the trading range, or does it not? We identified at the beginning of 2018 a major change of character with a buying climax, automatic reaction, huge outsized reaction compared to the uptrend that we were in before. And at that time, just using, foundational Wyckoff technique, we established that there was going to be a range-bound market for some period of time into the future. And we can see that is the case really across all of these indexes. And so after the upthrust that we had into what we are calling an upthrust after distribution, we had the classic response to that, which was a failure. So after that upthrust after distribution, we had major liquidation by strong hands in a volatile market with high volume, and this took us down and out of the range-bound condition. So this is the major event of the year. And so now, as Ramon said, we are going to determine whether or not, or establish if we can, whether or not this market can conduct itself in a maybe an accumulation of sorts where it can have a more important rally, or whether or not we redistribute for another move down. We could say here that we're under the ice, and that the inability of the market to show good price action with good demand that takes it back above the ice and keeps it there, that this becomes a very vulnerable place for the market. And so we're going to be looking very, very closely at these scenarios.
Well, during the first phases, phase A and phase B of a trading range, we are going to have a lot of volatility. So our expectation is that for the next month or two or few months, and especially going into the trade talk deadline and other events that are on the horizon, we're still dealing with the budgetary things. We're probably going to have a lot of volatility up and down, but predominantly we're just looking for a couple of scenarios. The first scenario is just a trading range, and we kind of established that we have a selling climax. We are in the rally mode right now, short term. So we are still thinking about where automatic rally or automatic response could come to. And usually it would come to the area of the resistance. And we see how we're very, very close to that. On the Dow, which is clearly outperforming, the Dow, if having another good day, could be back into the major trading range. And this would be a really, really good bullish behavior and development. So a trading range, and out of the trading range, a question of the bias. Is it to the upside or to the downside? Or another scenario, would we have some kind of attempt to return back into the major trading range? All right, Bruce.
I'd like to just say that one thing that is encouraging to me, and I believe that with what's happened here in the fourth quarter and into the end of the year, we have been saying over the course of the last number of sessions that the market was headed towards the end of the year, end of the quarter, with a lot of supply, and that it was likely to end the year near its lows. And that's exactly what's happened. And so here, the interesting thing is, look at the S&P. It's gone under its downtrending channel, and so that's an oversold condition. We have point and figure counts in these different indexes, which count to the area that it went to, where it stopped, and we've had a good bounce after that. So we have an oversold condition, we have a climactic decline into the lows at the end of the quarter, end of the year, and we have an oversold condition in the trend channel. And so these are all things that would lead us to believe that at least on in a localized area, that we have a new range-bound condition and possibly the conditions for a bounce in the new year. And so we think a lot of selling got accelerated into 2018. Now that we're in 2019, we have the potential for a vacuum of selling, which could produce maybe short covering and some other phenomena that could drive prices up a little higher. and maybe even up to that rising trend channel that is drawn on the chart. So we have the reasons to think that the market is done going down for a while, and maybe it's going to reform for another decline, but we're going to wait and watch and see what happens here. And these point figure counts have been quite good so far.
And I see that you guys have a lot of comments about the futures, that they are down on Apple News. Yes, Apple just announced some, earnings guidance and some, decrease in sales, deceleration of sales, and, with the references to the trade talks. And this is a very typical behavior for the environment that we're in.
I mean, we could say that Apple has been discounting bad news coming with its weakness, because it's the price action will precede the news. Mm-hmm. Anyway, Ramon.
So it's not unusual that at the points of the resistance, we're going to have some kind of, catalyst, and Apple acts as this catalyst to produce a sell-off. Because the sentiment is still very much bearish. And actually, Bruce, next week, let's talk about the sentiment, right? So let's look at the breadth, and let's look at the breadth on this rally, and let's just see how the events are going to unfold. But again, guys, we are in this formation right here. So far we could do this. So don't be alarmed that during this type of the consolidation, we could have multiple days where we have a significant move either to the upside or to the downside. That's typically what happens in the trading range.
The composite operator will, when there's a sharp break like we've had that has some of the elements of climactic action and into a point and figure count area, there will be a bounce. And then after the bounce, the market will tend to go back down and retest the lows of that area, and it's the CO types gauging whether or not there is supply that's of a size that can drive the market down into a new downtrend or not. So they're asking the question here, with the return back to the lows and secondary testing, whether or not the market can hold in this area and then produce a more important bounce. So we always expect testing. And
let's look at this test, Bruce.
Just the Apple news alone may be the thing that helps to produce that test.
Yeah, that catalyst that produces that sentiment to push the price down. But let's look at examples of those tests, and let's look at some analogs. So we were discussing in December a lot of analogs that were based on moving averages. Again, really quickly, I'm going to repeat. The red one is 21 days. This is just a month's reference to a month. The blue one is 63 days. That's a quarter. The green one is 252. That's a year. So we are actually not using 200 moving average. And then the black one was 504, which is 2-year moving average. And we're looking at the first analog and the first scenario, bearish scenario. Well, why? Well, because we have lower highs, lower lows, a definition of a downtrend. So that's the bias that we are looking at first. And we said in the last session that we were somewhere here. And look how analog works so nicely. So if you just caught that session, that latest session, and traded on the intraday level, there was a lot of money to be made to the downside into the climactic action. In 2007, we're seeing that after the climactic action, out of the oversold condition, where we saw the increase of the volume signature and the supply, and which acted as a major sign of weakness in this case, we had a rebound, and we had a very sharp rebound. So, and that's exactly where we are, and this blue box right here is showing us on the analog where we are. We are somewhere here. So if we are going to have some kind of test that comes next, look again at how quickly we go down. And this happens because the sentiment, the bearish sentiment, is still prevailing for the majority of the participants. And they are willing to sell much faster all of their long positions, and they're willing to short the market much faster at this point of time. So we are going to have, still a lot of volatility. We would be expecting something like this to unfold.
And there's our test.
Yeah, and here is our test right here. And I mean, with Apple News, Bruce, I really was encouraged how today the close happened. So we had some selling into the opening, and then everything was lifted by the close of the session. That's a bullish sign right there. But obviously, Apple could produce that bearish news. Okay, well, let's quickly move to another analog because we have quite a lot to cover here. A bullish scenario. I'm bringing to your attention a couple of bullish scenarios here. One is in 1998. And I want to point your attention to this analog because of how the uptrend, which was a secular uptrend, and that uptrend was violated in 1998. During the Russian default, we had almost the same type of the situation where the sentiment, bearish sentiment, has increased so much on the violation of that uptrend. But after that, after the consolidation in the very volatile trading range, we had a very, very quick rally up. So we have to think about that. In 2016, also out of the oversold condition, in the long-term uptrend, we are finding a rally after that, and therefore a question here: are we violating secular uptrend at this point of time, or have we just created an oversold condition right here? Bruce, what do you think?
I'm going to tend towards the idea that we've climaxed. I want to see a good test, and then I'm expecting to see the market come back up into that channel. But my market action could change my mind. But I think we're in a good place to get a bounce back up into the channel.
Mm-hmm. Okay, so these are the bullish scenarios that we would be looking at, and then one more scenario that I want to bring to your attention, guys. So this is something that we study in the Wyckoff Trading course and Wyckoff Practicum. So this is not necessarily the pattern that usually on the conventional schematics you will see. This is a diamond formation and what I call a very complex reaccumulation with some distributional elements. So what am I talking about? Well, there is definitely a reaccumulation texture, and by texture I mean how the price behaves and how the volume signature behaves. We see the diminishing volume signature into the second low, which is a higher low. That suggests a reaccumulation and the move up, only to see that rally stop at the point of the resistance, and that becomes an attempt to upthrust rather than a sign of strength. And then we go into some distribution where there is some selling. We see then an increase of the supply signature, and that distribution creates a short-term downtrend that leads to an oversold condition. That oversold condition will always be a lower low in this whole structure, and it will be the lowest point in the whole structure because of the overall bias to the upside. If we would look in the hindsight at the whole structure, we would know that this was a reaccumulation. But at that point, at the point of the spring, think about the sentiment that people have at that point, and it's definitely extremely bearish. So therefore, for those institutions that still see value, this is a great event to come in and establish the positions. And as they do so, look at the volume signature here. They're very consistent and they are somewhat aggressive, in establishing this position. And that could produce a very meaningful rally. In 2 months in Tesla, we had this rally off the lows out of the most bearish sentiment that we have had. The same pattern has happened in the Dow Industrial in between 1965 and 1980s. And we had the conditions where there were a sprint condition in 69 that led to the rally that failed. So this reminds me of this rally right here. And that created a short-term downtrend. And that downtrend brought us to the new lower low, to the oversold condition, to a sprint. And look again at this rally, very aggressive rally, sharp rally to the resistance. So this could be one of those scenarios. And we kind of doing the same thing here, Bruce, right? So reaccumulation texture since the highs and since the lows here, absorption, a rally into the upthrust situation, and then local distribution and the short-term downtrend, lower highs, lower lows, oversold condition. So here we're thinking either we're going to have a rally or we're just going to have a trading range. And obviously a rally would be more of a bullish condition, and then a trading range would most likely suggest a continuation of the downtrend unless trading range happens really fast. There is a very aggressive, quick accumulation, and that could push the price up. Bruce, talking about 1974 market, I thought that was a great analog, and you brought this up as well, but you're bringing this up in such a very interesting, unique perspective. So tell us what you think about this analog.
This is the Dow Jones Industrials 1970, late 69, 70 to 1975. And I was just trying to think of the different analogs that could speak to our current situation. And what really struck me was in the beginning of October, at the beginning of the fourth quarter, the market had a decidedly different change of character, turned into a downtrend, supply was present, and the market just started marking down. And this was into the election first Tuesday in November. So this is a month ahead of time. So I was thinking about the election, and I really want this discussion not to be about politics. I want it to be about tactics and about analogs, because I'm not, especially when it comes to the market, I'm not political. I don't think in a political way. I think in a tactical way. So I'm having a discussion here a little bit about politics, but I'm doing it because I think there's an analog here. So very briefly, you can see the Watergate break-in occurred in June of 72, and I have an arrow to the week where the break-in occurred. Now, the thing is about that break-in was that it was a very obscure story. Didn't mean much to anybody. It was like page 7 news. Now you can see that in November, so this is June into November, so you can see how big the structure is. It's a multi-year structure, classic distribution. And into the election, the market goes up to and through 1,000 on the Dow, which was a very big, important, round psychological number for the market. And in this case, the rally followed through into the end of 72, which is, again, so this is, in this case, it rallies up into the end of the year and then has a sea change, just a complete change of character, and starts to liquidate on a pretty steady basis. After a minor sign of weakness, there's a last point of supply, which is a short covering rally of sorts, and then a very important decline that went right to support, major sign of weakness, and then a rally of very poor quality into a last point of supply. Well, now during this whole period, from this upthrust all the way over to the breaking of the ice, is the momentum of the story that the Watergate break-in had Richard Nixon's signature or his fingerprints all over it. And so at least that's the way the press made it out to be. He had a 49 state landslide victory in the election. And so he won by a huge margin. But what happened after that is that the Watergate story got closer and closer and closer to him. And there was a Democratic Congress that was investigating and investigating and investigating this whole thing and was hostile to Nixon. Now, that sounds kind of familiar to the situation now. The difference being that the House was turned over to the Democrats in November. And so the investigation, then they have said that they're going to investigate President Trump, and they're going to investigate him for these supposed events which involve, for among other things, Russia. And so whether or not there's a smoking gun there or not, they didn't know that there was a smoking gun for Watergate, and they just kept investigating, and the investigations got closer and closer to President Nixon. And so here, I think that these kinds of things which are politically destabilizing, are things that the market doesn't like. And so the market is looking ahead at the next 2 years into the 2020 elections, and is saying that there is going to be a war, a battle of wills between now and 2020, where there's going to be investigation after investigation by the opposing party, and they're going to try to find smoking guns. They're going to try to find things that they can pin on the president to diminish him into the 2020 election, and possibly even could lead to impeachment. And they have said this themselves. And so here we can see that impeachment became inevitable in the Watergate scandal. And in the final stages, you can see that Richard Nixon was counseled that impeachment was going to occur, and that the Senate, where the trial would be held, would convict him. And so President Nixon elected to resign instead of go through those events, which would be impeachment and then the trial in the Senate. And so you can see that 6 weeks, approximately 6 weeks before the low, he resigned, and then that low that was made after his resignation, which produced a cause, an important cause in that structure, was the end of the bear market. And that bear market, from the upthrust all the way down to the selling climax, was inflation adjusted, one of the worst bear markets we'd had since 1929-32. You can see how much interest rates went up throughout that whole period. We have rising interest rates now. So there are some parallels here. I think it's just the political cross currents that the market doesn't like. I don't think that it's going to be anything like this, but we can see some analogs here that we might want to pay attention to, that we could cue our tactics and strategies off of. So anyway, that's all I'll say about that today.
All right, great. Look at this, guys. So upsloping range, the texture of this area right here suggests a move up thrust, and then kind of reminds me what we have had, right? So the first leg down, another consolidation area, major break to the downside as a major sign of weakness, and now we are rebounding up. So I would say that, Bruce, that we're probably somewhere here. We could be somewhere here. We're close at the support, major sign of weakness, and then we could definitely move to the downside really, really quickly if, what you're saying, Bruce, is going to materialize, and there's going to be some kind of, attack, on the president, or the Republicans in general before the elections.
It's just going to be generally, investigation after investigation. I don't know what's going to happen. I don't know that there's anything there. They didn't know that there was anything behind Watergate at the time, but they just kept investigating. And so there may be nothing, but I see no scenario where the investigations stop until the 2020 election time is over. And so just the effect of having this constant barrage of investigations and of news and in the press, like it was under Watergate, has similarities. There's commonalities there. And so beyond that, I don't understand the politics. I don't know what's going to happen. I'm just thinking about how the market might look at it.
All right, sounds great. Time?
time.
Great. Perfect. All right. Uh, Bruce, okay, so what are we looking at here? The PNF, this is obviously the scenario if we're going to have some kind of rally out of this.
We have so many interesting point figure setups that have occurred in here, but just looking at this one, you can see here, this is just a 5-minute point and figure chart, 3-box reversal, 44.8 box size ATR, and so a pretty big box size. And you can see that there's 2 counts so far. Now, I think that the market may have to go back down and have a test of the recent lows, which could build a bigger count. But as we are right now, you can see this gold count, which is just off of the climax, produces a count that goes 23.7 up to 24.3, call it. And even from there, that could be a rally. It could produce a reaction with a test from a higher level. But there's some counts that are building down here, and they may not be done. They may get bigger. So this is interesting, and I love the way the structure is because it's just this persistent decline, down, 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 and then a climax at the end. And Ramon, if you could just draw a trend line underneath these lows in the downtrend, it's a slightly different angle, but you can see how well that works, and there's your oversold. Just a great, great case study.
Great. Okay. Well, let's talk about the market in general and with the sectors. Obviously, we're going to discuss the stocks, and next session, we're going to devote to a lot of research on industry groups and the stocks in those industry groups. Obviously, we're going to talk about the markets as well. This is what we usually do. Bruce, looking at the sectors, what catches your eye?
Well, the thing that really stands out is that in almost all cases, we've had an acceleration downward into a climactic surge that has been stopped at the end of the year. There's an attempt to bounce. So you can see that like all of these sectors are just, way off their highs, are in confirmed downtrends. This has been a broad destructive decline, and you can see this just from the way all these different sectors have gone down. There's really no place to hide. Look at the utilities, bottom left, and notice how even the utilities at the end in the fourth quarter, which were the leadership, classic leadership, have suffered into the end of the year. So this has been very destructive to the breadth of the market. Ramon.
Well, some of the things that we see on the short-term basis have some kind of positive view for us. So for instance, let's look at the materials. Look at the relative strength. We're making higher highs, higher lows. It's a short-term. We're above the moving average. But it shows that there is some kind of leadership on a short-term basis in the last 2 months or so. Look at the industrials, even though they're still below the moving average, but the acceleration to the downside is, on a relative basis, is not that great. So something maybe short-term is there, and we just need to understand tactically. If we go and we select specific stocks to the upside, what kind of stocks are you guys selecting? What kind of criteria are you using to select those stocks? This is going to be extremely, extremely important in 2019. Be selective. Look at the technology as well. Kind of, barking a little bit a trend here on the very, very short-term basis. There are some slight higher highs, higher lows here. And again, this just tells us that some stocks in this sector or industry groups actually behaving okay. But the biggest question, Bruce, to me is even if we're going to have a rally, it's all about what kind of quality of the rally we're going to have. Are we going to have a rally that's going to bring up the whole market, or just specific segment of the market, or specific industry groups, specific stocks? And even though we're feeling that short term there should be some kind of bounce, we're really, really cautious as to the quality of that bounce. Bruce, anything else on this side?
Tomorrow, well, next week we're going to have a closer look at the breadth, and we're going to be able to quantify just how much price damage there's been when we look at those breadth indicators next week. And I'm going to look at one tomorrow, which we've looked at numerous times before, and I'm going to look at some industry groups with just a few tomorrow, so that we can have sort of a model for how to look for best leadership and then the worst laggards, industry groups and stocks, something we've done here in WMD many times. So this will be nothing new to our regular people, but it will be maybe something new for the people that are watching, market watchers. But we will be doing more of that through the year also. But this has been an incredibly destructive decline in the fourth quarter.
Well, make sure that you log in to hear Bruce's presentation tomorrow on Stock Charts TV at 9 a.m. Pacific. And
this will be great for people that are not regulars here, because this is sort of like a way to catch up with the way that we look at these themes, industry groups, individual stocks, and so on.
All right, let's look at a couple of case studies. The first one is on oil and Bitcoin. And we've talked about oil for quite some time. We talked about the correlation between the oil and the markets and how they were so highly correlated. And then we were looking for the spots where correlation actually stops and where the market starts to go up, and what kind of follow through we have with oil. So we had one failure here with oil that suggested, lower prices for the market in general. Second failure as well to advance here. Even though we had a change of behavior here, we didn't have a change of character, meaning that we didn't have a sign of strength in the backing up action. So this was a very interesting case study by itself. And then as we went down here, what is encouraging, at least short term, is that we had a really, really good rally here. Look at this rally. Look at the spread on this rally and compare it to the previous rallies. This one, this one, this one, this one right here. And it looks like maybe the distance is the same, but the way how the price travels up is different. It just shows that there is some buying behind it. And what's encouraging here on a short-term basis is that we are actually resting in the trading range right here and trying to break out. And even though the volume signature is extremely high here, it suggests that demand is increasing and supply is increasing as well. So for me, what's important is the measure of supply, right? So how much supply we have here and what kind of price reaction to that we are observing. And what we see here is a tail, a supply tail, and it just goes to the resistance level that was created by the previous high. So if supply has come and the price only came to the support which acted before is the resistance, it's a good sign. It's a sign of absorption. It's a sign of absorption on the way up. Having said this, any catalyst news in the market could produce also some disturbance in oil because, again, of the correlation. Look how the lows are correlated of the market and the oil. Just uncanny how this correlation works. Bruce, any thoughts?
Oh, you've brought these up over the last month or so, and it's a wonderful correlation, and I just hope you keep bringing these charts to us so that we can look at them. I love the way this is trading.
Bruce, how about this? Let's look at Bitcoin. We haven't looked at Bitcoin in quite some time, and there is a reason why. Well, first of all, Bruce and I, we don't trade Bitcoin, unless I don't know something about you, Bruce. Do you trade Bitcoin?
I use it to rent movies at Redbox.
Did you do this when it was at 20,000? What was the exchange rate for that? Mm-hmm. So, couple of things here, guys. Look at the top that Bitcoin has made in December. It actually preceded the top or the market top at the end of January. So there is difference here of maybe like about a month and a half to 2 months difference of how the top has been made. And by the way, Bruce has mentioned so many times when we were discussing Bitcoin or Bitcoin related or cryptocurrency funds that there is a lot of speculators in the crypto market. And as the money were going out of this market and the top was created, the speculation in this asset has ended. And the speculation more was to the downside. And a lot of the big money, institutional money that were in this market were closing out their positions on the way down. And that's what created this first big leg to the downside. And then the market follows. So we are establishing here with the tops some kind of correlation where the tops are being formed almost at the same time. And looking at the bottoms here for the market and for the Bitcoin, it's interesting to observe that on the daily chart, the Bitcoin actually shows some sign of life. What do I mean by that? Well, look at the volume signature that preceded most recent price action. There is definitely nothing here. There is no institutional activity in this area. Nothing is happening here. It's just like it's dead. And as the price goes down, there is some value, and we're seeing some buying. And we're seeing that somebody's stepping in and buying Bitcoin, or at least trying to buy Bitcoin at this point of time. What's encouraging is the rally on the intraday level. This is for our chart that we have had just recently in December. And it was a very constructive rally. It had the volume increase, demand increase, and look how the price moved to the upside. Very freely, came to the resistance, stopped, went down for the retest, but didn't go to the lower level. It actually is in the upper trading range, not in the lower trading range right here. And it seems like it's trying to get out of the trading range. So I would say that if, Bruce, if the price gets out of the trading range and commits to the upside, confirms and continues, so have all of these actions, this is going to be very bullish for the Bitcoin. And I wonder if the low in the market, that comes slightly later on, like it did with the top, is going to be an indication that, maybe we're going to have some kind of retest and then a continuation. So just a very interesting analog that I thought that might start working again. Bruce?
This is a wonderful presentation on Bitcoin, and it's going to be really fun to watch this. I just want to make a footnote that I did a presentation on hypodermic tops that have occurred through history. I didn't do them all, but I did a number of them, and it compared them to Bitcoin. And it's remarkable how close these accelerating markets are to each other in their ebbs and flows up to their final highs. And if you get a chance, they show this every so often, I believe, on Stock Charts TV. Go have a look at that, because Bitcoin followed the analog of these prior hypodermic uptrends in China, in gold, in the 29 stock market. What else? But anyway, it doesn't matter. So do go have a look at that, because it really did give us a roadmap for how Bitcoin could unfold. And I'm thrilled to be able to watch this and see whether or not it can get ahead of steam and start to go up, because that clearly looks like it's under absorption. So
could fail,
especially now,
Bruce, right? I mean, like, could just go up, have some kind of up thrust, get people in, and then just sell again. And this is going to be a very important spot. Usually people, kind of more drawn to the bottoms because they're trying to find the value. They're trying, to buy at the bottom, at the very much, bottom. But I think for us, what's important is a confirmation. We need to see that the price could get out of this range. That's number one. And then it could react positively to the support area. and then could resume the uptrend. So the confirmation actually comes at this spot right here. It's a little bit late, but it's a confirmation, and that's why it's called confirmation. All right, Bruce, what about another case study? And this one you did multiple times, and we've talked about this before, Fang Stocks and just the internet stocks as well. And you're starting here with the FDN, and this comes from your blog.
Well, we started to look at the Fang stocks as in late June as being in a classic climactic overbought condition. And you can see here on this chart, top left, the buying climax throws over the channel, and then it reacts, automatic reaction, range-bound market. So the same concept that we followed with the indexes starting in January, February. Same idea. Goes up, has a secondary test. We talk about how markets will tend after an important move to react and then retest the area that it went to initially, in this case at the buying climax. And so we did a blog, wrote a blog and said, hey, Bitcoin, I mean not Bitcoin, but Fang has started to show signs of losing its momentum. And so we've been following it ever since. And we did a blog in June 30th, and then we did another one in September 19th. And this FDN has all the Fang stocks in it and other Fang-like stocks in this internet index. So it's a really good proxy. And so you can see then that it goes into a pivot and breaks down, and then Fang became leadership to the downside. Well, I don't want to spend a whole lot of time on this chart. We've all looked at it many times. We've brought it up to date here. Look at the trend channel, throw under the bottom of the channel, oversold. Now, it comes at the end of a climactic decline where it has a pretty sharp decline into the end of the year. So we have institutions accelerating their sales of Fang stocks because they over-own them. They've been using Fang to create performance in the last couple of years, and all of a sudden they found themselves with Fang being just a millstone around their neck. It's become dead weight for them, and it's destroyed their performance in 2018. So they're getting out of as much Fang as they can, and they want to get down to a lower exposure. So they created a climax and accelerated their sales into December. And now we have an oversold. We have really a three-part action here. We have a climactic decline, we have an oversold condition in the bottom of the channel, and bottom right chart, we have fulfilled the point and figure chart. And we've looked at this point and figure chart here in our group a few times anyway over the course of the year. And we can see here that this point figure chart has been fulfilled. It went one box below the low count to 108, and now it's attempting to come back above the old support area, and it's coming back into this area if it can. And so now we just need to see whether or not there is the potential for base building or absorption of some kind that could allow this to have a better rally, maybe a short covering rally in the first quarter. Ramon?
Two type of scenarios, again, as we were discussing the market, there are also the same two type of scenarios that we could discuss here. Obviously, as Bruce has mentioned, oversold condition, we see from the volume signature that some demand is present here, so some value for institutions they are buying here, and that's what producing the current rally. So the question is how it's going to unfold. Well, the rally in the bear market going into the potential phase C could be the most dynamic rally, because this is where weekends are seeing some signs of bullish activity and they're willing to go in and establish the position. As they do, initial momentum takes the rally back into the trading range and then creates an upthrust condition. It could be a localized upthrust above maybe a local resistance, and then a failure, almost instant failure. So that's how the bear market would develop here. The bull market would look somewhat similar. The rally still could be really good, but in comparison to the reaction in the bear market, the next reaction could have some volatility, but at the end, there's going to be some elements of absorption, inability of the price to go lower and to create the new lower low. I remember the pattern in Apple in 2013. If you guys go there and review that, there was kind of the same downsloping structure, and then there was a very good rally, and then it came back, retest, and then had an even better rally, and this is where the absorption has happened before the next move up. So something like this is also important. So we need to understand what kind of rally we're going to have. That's number one. And the second one is what kind of reaction we're going to have. Okay, Bruce, let's look at Apple. So one of the Fang stocks.
We have looked at this chart in the past, and so we've looked, actually I wrote a blog back in 2016 when this reaccumulation pattern was completing, and took a count, and it was around 112, I think, at that time, and said we have a point and figure count at that. I think it went to like 206, and then we were able to add a couple more columns over here and make the count a little higher. And so, because we were still in the reaccumulation structure. And so look what happened, 215, 231, it went right to the ultimate high in Apple. And then after a reaccumulation that occurred on the way up, which produced another count, 216, 226. And so that confirmed the bigger count. And so, and for our regulars, we've been looking at this chart. The thing that's so interesting is look what happened as soon as the point and figure count was fulfilled. Apple just hit the wall. And so that was just stop the advance, change of character. And so I have done over here this chart on the right, which is a distribution. It's one box reversal. This is a 4-point scale over $200. So it's 15 times 1 times 4 gives us a count of 60. So we have a rather wide range. So what I did is I put the midpoint of the target area in here so that you could see sort of the area that it could fall into. Well, look what happened is it just went into this sort of a climactic acceleration, went down, got within one box of the low count. And now what's interesting is that we have an attempt to rally. And now with this news that we've had, there's probably a test coming. What I would think about here is, and I'm not a big bull on Apple, I don't see a cause built. You always want to look for a cause for at least some kind of a trading rally, swing rally. And we don't see that. But the interesting thing is when a stock goes down like this, it's telling you that there's some news coming at the end. There's some news that's going to come at some point because the CO is getting out, short sellers are getting in. They have an idea about what's going to happen in the future with either business conditions or whatever. And in Apple, they had an idea about this. Well, now headline news is a negative. Well, what happens if Apple goes back down to retest these prior lows and it can't get any follow through? So on the news, it has really no ability to be able to keep dropping. So that would tell us, at least for the moment, that it's exhausted in its decline and maybe builds account for further decline, or maybe this is the extent of it. So we want to pay attention to how this stock, any stock, reacts to news. And so it looks to me like the market has known for a while now that bad news was coming, and the point and figure chart told us how far down the stock could go. Ramon?
Yeah, I had a position here in the stock. I opened it somewhere here, and
I didn't do this to make you feel bad.
I no longer feel bad about any of the trades that I
okay,
do.
all right. You sounded kind of sad.
Well, I am a little bit, yeah. And it's not about missing on the profits. It's more about missing on execution. So I'm probably gonna make a video out of this. And by the way, if you guys go to
good.
our YouTube channel, yeah, that's gonna be my psychotherapy, Bruce.
There you go.
Those
I like it.
vlogs, yeah. So if you go to our YouTube channel, which is Wyckoff Trading Method, you will find, first of all, power charting videos. We are just going to post two videos that Bruce did for stock charts on the PNF, and there is a question here
Yeah,
from
I
one
see
of you
that question.
guys on do your blog, post articles, discuss how to do the PNF count. So those two videos are basic videos that Bruce has done on the PNF. Obviously, a lot of the PNF material that Bruce has on his blog, and I would highly, highly recommend everybody to read Bruce's blogs because I consider Bruce to be the number one expert in the world on the horizontal PNF counts. Those are very tricky. And Bruce and I have done two parts, two courses on the PNF, which you could come to our website and you could find those. And this is where we go into such deep details of how to construct those counts. But coming back to this trade, so
Well, and what I want to do is I want to ask you to tell us how you would do this differently if you
yeah.
can
Okay.
do it
So yeah. So
sometime you
sometimes we
have.
do this kind of like as a coaching session. So let's do this. So I really have to post-analyze this, Bruce, a little bit better. So obviously the analysis was correct. It's just the execution was incorrect. So I got out of this position before the actual drop. So probably gonna, have have that video psychotherapy for myself, and it's gonna post it for everybody, to look at. So whenever I'm done with that, I'll let you know what I did wrong.
And I've done a number of blogs on Apple because it's such an important stock. And so you can go back even into, say, some of these recent Apple discussions, and there's links to the older ones. So it's such a good stock. It counts well. It trades really well. It's just a good stock to study from a Wyckoff perspective and to trade.
All right. Well, let's look at other Fang stocks. Um, Facebook. So Facebook had a very interesting year in general. We had a lot of distribution activity that we don't see actually on this chart right here. And then we had a very unusual upthrust. I have not seen anything like that. The character of this upthrust over the structure that we have had was just unbelievably unusual. Look at the volume signature. There is no buying there whatsoever. The price goes up just because there is no selling, but there is no buying there. If there is some buying there, then it's the weak hands that are buying. And then a big break to the downside, which shows a sign of weakness, and then a very well-established downtrend. And now, again, as with some of the internet stocks and Fang stocks, we are in the short-term oversold condition. But I don't see necessarily a lot of buying here. I don't see institutions coming into this position like they did here and be so aggressive and to buy the value at this point. So I would be very, very cautious about the stock, Bruce. I would be looking maybe at the trading range at the most right here, and I would be observing the price fluctuate between the support and the resistance and maybe create more of the trading range. In case we have a rally and then some kind of reaction, this is still would be a big question for me. Would this be a best selection out of, let's say, these four stocks or other stocks, that technology stocks that we have? And even looking at Google, which looked very, very bearish on the way to the downside, but I really like the causality here that is being formed here and how the price comes back after a potential spring right here. Bruce, what do you think about Facebook and Google?
Well, again, I think that there's been this acceleration of selling into the end of the year. I think institutions had way too much Fang in their portfolios and Fang type stocks, and they just persistently sold these stocks right into the end of the year. I actually, just looking at Facebook, looking at Google, is they look better than most stocks in the market in the last, say, month, in the regard that they've made minor new lows below sort of climactic acceleration, and now they're attempting to get back up into the range. There could be cause building for further decline, but I do think that the first month or so of the new year could see these stocks, maybe they just sort of float here or go sideways in a trading range, but maybe they can get a little bit of a rally going and some short covering. So I think that they're acting better than many stocks.
Mm-hmm. So let's talk
at the end, right at the end of the year.
And I agree with that. I totally agree with this. Google especially like shows that.
Yeah, Google looks the best.
Yeah, and it looks like it might be more complete than, other stocks. Also, looking at Google, why Google looks a little bit better. Look at Amazon, right? So look at the volatility that it has, and look at Google. It's kind of very, very, silent here. There's not a lot of movement. So this is what we want to see, as an element of a potential absorption. But if we would be talking tactics, I would probably only be trading with an idea to the upside, only with an idea that this is going to be a very, very short-term trade. I need some kind of proof that, let's say, Google or Netflix could not just rally above the previous points of resistance here, but they also could sustain that gain and not come back into the same level of the trading range. Bruce?
Well, here with Netflix, I'm seeing the biggest distributional top in Netflix of any of the Fang type stocks. And so this to me looks somewhat ominous in that you have a very large structure that could, I think, could be counted and could lead to lower prices than where it is right now. Mm-hmm. And so I would be very concerned about that with Netflix.
And that's why Bruce is just continuing the thought that I had on tactics. If we're thinking that this cause is big enough to take this stock even lower, then think about the short-term tactics and the rally that we're talking about. So the tactics are going to be that you could have this rally as an upthrust that can overcome the previous point of the resistance. Take this and kind of be happy for now, or take this on a very small position size. Don't open a regular position size, right? And then if it fails, then it's easier to get out, or you just take this profit, and then if the downtrend resumes itself based on the cause, then we just continue to the downside.
This is kind of a fun discussion in the regard that with Netflix, you could look at this big cause that's been built, and as a campaigner, say for those of you that like to sell short, and you're going to campaign a short sale candidate, you look at this big distributional structure and you say somewhere out here, it might be in the second quarter of the year, there's going to be a great setup for a turn down and another leg down in Netflix, potentially. We're going to watch and wait for the cues from the market to tell us. But this could be one that we would stalk. We would be very patient with it and wait. Who knows? This could be the trade of the year for a campaigner.
Mm-hmm. Okay, great. All right, let's go to the next section here, and we're doing so well on time. Wow. Let's look at the stocks that you guys send us, and this is a regular segment that we have for those of you who are new to WMD. We encourage our students to label your charts and send those to us, and we would look at those charts and we would give our review and recommendations. All right, and the first one comes from Paul, and this is Medtronic. Bruce, go ahead.
Well, here is the case.
Didn't we look at this chart before? I remember last session.
I was looking at it earlier today, and I'm going, I saw this chart earlier because I saw it earlier today.
Well, I remember it's from the last session. Oh my gosh, did we?
Yeah. Yeah. So it doesn't go through the end of the year. So,
That's true.
but let's talk about it anyway.
All right, let's do it.
In the regard that we can, just sort of go through the idea of Medtronic as a, now, what it has done here is it's gone down to $85. So it went just above $85. So so this, Ramon, I'd like to point this out, that what you've been describing as a attempt to
Actually,
rally.
this was a really good call. I remember this. I was talking about this rally as the second point of excitement, and that the price probably will go down. Yeah, that was a really good call.
Well, so this goes to the idea that you've been talking about earlier about building a base of sorts that produces a rally, but the rally goes above the prior peaks and then fails and goes into a new downtrend. Isn't this exactly what you were talking about just a few minutes ago? Yeah. So why don't you go ahead and finish your thought with a real life example?
Yeah, so we've talked about this, and I apologize. I realize, Bruce, what has happened. Usually we have, we're working with the last week's slides, so we're just converting them into new slides, and I think that's what happened. So, Paul.
Well, this slide was meant to be.
Yeah, so look at the supply that comes right here at the in August. There is a lot of supply in this bar. And this is the first climactic stop in action. This is where, for the first time on the earnings event, most likely, institutions are seeing the opportunity to sell into the strength of weak hands. Then we're seeing some distributional elements on the way up in this area right here. This is the second time when they sell. Then as they sell to the, the price can no longer sustain the gains, there are fewer buyers, and therefore the price goes down. So very logical supply and demand. And then look at what happens next. In this area, we have elements of a reaccumulation, or what sometimes I call a reaccumulation texture. So the price and the volume behaves in the very bullish way, suggesting a rally. So a lot of the weak hands are going to get in on this rally, and that's why the rally is going to be dynamic. And in WTC, we call this a second point of excitement for weak hands, whereas the first one was on that climactic action, where institutions were selling their holdings into that excitement. So usually after this type of failure, look how it acts as an upthrust. Bruce always talks about how upthrust has this continuation as an acceleration of the price to the downside. And it's going to be much, much faster than what we've seen before after the upthrust. And this is just a failed upthrust. So therefore, once the price commits below this level, this acts as a confirmation. And I would be just tactically probably, Bruce, thinking about the entry somewhere here on this bar even, or maybe on the next bar. So that, would attract me. And did you say it went to 85?
Yeah, just above 85. Yeah, 85 and a third.
Yeah. So that was a good call. All right, Bruce, what about the next one? Take the next one with, this comes from Momo, and this one is very interesting, and I want you to go through this because of the PNF here that Momo is showing. So it's a reversal of 3 with the box size of 10, and Momo is calculating that it could actually take us back to the lows of 2009 and 2002, 2003. So what do you think about that?
Well, that Nixon, President Nixon analog in 73, 74, you can see there's a very big structure. And so being a very large structure in the S&P, you can see that if there truly is the market participants don't like this kind of political drama, that it could produce a free-falling market below key support levels. And so this is the thing that we must be concerned about and must be good risk managers, is that we are vulnerable below this structure, which appears to be distribution. it certainly has distributional qualities. So when you look at the decline off that upthrust, and you look at the decline and the advance and the next decline, the next advance, you can see this is something that we always emphasize about distribution, is that volatility remains high throughout. Once you start to systematically liquidate a market, the volatility never really diminishes. It just stays crazy like that. I've had numerous people come to me and they just say, this market's crazy. Look at the volatility. It's like, it's unnerving to people. That's the way bear markets happen. And people have said to me, oh, the market is broken. It's like these algos have, like wrecked the market. You can't trade anymore. No, no, no. This is just the way bear markets unfold. This is the way liquidation happens. This alone is a reason for us to be very careful, is just the way the decline has occurred from the upthrust down below the support level. And so if we go back and we look at the period after the February low, we can see the volatility coming out of it. And also you can see that there's diminishing ebb and flow of the market, making higher lows throughout, producing a last point of support and a countable bottom that we can trade. And we were able to see that, identify it, talk about it in our sessions, and the market produced a beautiful rally right up to the upthrust price levels. Here we have a wholly different animal. So my only advice, especially on the point and figure part, is that I would tend to take this in bite-sized pieces. And so I will be aware of the big counts, but I can't really function on the really big counts. I just have to keep them in the back of my mind. I want to think in terms of the pieces that are occurring. So here we have a redistributional kind of a structure where we have a series of last points of supply where it rallies off a support and rallies in a volatile way up to lower highs in October, November, December, and then wholly breaks down. So I would, at this last rally where it shows weakness through support, last rally, I would count from here up to the highs. And so that would, because we know that at the upthrust high, this is a little bit of a lesson on point figure. This is what I do, and it works really well for me, is that at the upthrust high, we know that that is the place where the large interests, the CO, the really smart people in the market, are starting to actively liquidate. This is where the selling is coming in. You would think that the COs have been selling on the way up. They're using strength to try to reduce their position sizes, but here's where the institutions join the COs and start to sell on the way down, and they sell on a scale down. They don't stop selling. And so I would take my count from the last rally point before the breakdown to the high. And so here we have 2, 4, 6, 8, 10, 12, 14, 15 columns. I'm looking at the point figure chart in the middle there. Mm-hmm. So we have 15 columns, so 45 times 20.
What's the count line, Bruce?
It looks like it's 2680.
Mm-hmm. Okay.
So that's 900. And so we would subtract that from the high, which is 2940. So that's 2040. And so that is a pretty big count. And so a substantial decline. And so that would be sort of the target area that I would be thinking in terms of. And then also from the count line, which was 2680, did we say?
2680.
So 2080 minus 900, 1780. And actually, I have a point figure count in my library that is that exact count, and that is my work. That's my working sign. And so that would be the way I would approach the current situation.
Mhm.
And in terms of this count over on the right, the only thing I can say, 30-minute 3-box reversal, I would tend to take that count, but my tendency is to want to count to the high, only because we're still in the distributional structure. So we're not out of the distributional structure. Once we get out, then we can start to think about redistribution counts.
Mhm. I would also suggest, and again, there is a question here, where could you find this information on the PNF? And I think that we mentioned this already. Go to our website. There is so much information on the PNF. 2 courses that we have there. Go to the YouTube channel. We're going to have those a couple of videos there. We have the video from Hank, his last presentation on the PNF, actually, at the Best of
He was
Wyckoff in 2017.
Yeah.
Yeah. So, and then obviously Bruce's blogs, and then on stock charts, Bruce has a lot of material. So just check it out.
I have some tutorials back in the first year I was blogging, I think towards the end of the year or at the beginning of the new year, maybe 2016, I did some tutorials on point and figure, how to construct them in the stock charts, point and figure charting engine, how to take counts, things like that. And we're going to do a lot of point and figure work in these sessions throughout the course of the year, because it's just such a great tool. I don't know of anybody out there that's really doing a lot of horizontal point and figure work.
If they do, who knows how they're doing it. And that's my biggest point, because guys, me and Bruce, I'm always about the quality, just striving, to be to give you the best value. And I think that PNF that is being covered, in our classes is just outstanding.
Now, let me, sorry, please.
One more thing, a couple of things actually here. So one of the things that I personally like doing with the PNF is to look at the count, look at where the target is. So we said 2040, right, Bruce? 2040?
Yes.
So look at where it falls into. It falls into 2015-16 range. It makes a lot of sense to me. So that is the count that I definitely want to have on my chart as a reference to a possible target that could be reached long-term, not short-term, long-term. Obviously, a lot of things would have to happen here in this area. So that's number one. And secondly, Bruce, look at the stocks, percent of stocks above and below the 200 moving average here. So, and thank you for putting it here. I didn't notice it right away, but as you were talking, and this is a monthly chart. So we usually look at the daily data, but this is a monthly chart. And we are below the 2015 low. That's number one. We are on the way to, we are at the 2002 lows. So that just confirms the overall bearish sentiment. And we know when everybody is a seller, what's going to happen? There's going to be some kind of bounce. Bruce, what do you think about the breadth here?
It's a wonderful data set to put on these charts, because I have made this chart for tomorrow. I'm going to talk about some analogs.
Why don't we not talk about this then, and then guys come tomorrow to Bruce's presentation.
Come tomorrow, and because we've talked about this repeatedly in the past here, but basically the one thing to take away here is 16%. Now this is on this monthly data point. 16% of stocks are above their 200-day moving average. And if we use that as our simple definition of an uptrend, being above the 200-day moving average, that means that 84% of stocks are below. 84% of stocks are in a downtrend. So, and we're going to look at past periods where that's happened tomorrow.
And where did it happen? Here. The only lowest point below, let's say, where we are right now is 2008, 2009. And we had such a big structural damage at that point of time. So
it went down to like 3%.
Yeah.
3% of stocks were above their 200-day.
Either we're going to have this type of bear market and we're going to go to those numbers and we're going to
Yep.
be just extremely oversold, or
Yep.
this just indicates more of the short-term condition where we are oversold, and then we could have a bounce up. So we'll see. And Bruce, yeah, definitely very interesting discussion you're going to have tomorrow. So please come 9 a.m. Stock Charts TV. All right, let's go to the next one. And in December, we've discussed gold as a commodity, gold, in different sessions. I think that we also looked at metals at some point, Bruce. Like we looked at silver um, and aluminum, I think. And I thought that was a very good call that we made. We kind of caught almost the bottom, phase C, and the sign of strength. And obviously, looking at the stocks is something of an interest because as we see gold improving to the upside, we obviously want to understand how we trade gold. We could trade gold itself, but we also could trade gold through stocks. And GOLD is one of those stocks. Bruce, so how does it look to you? Bullish, bearish, in line with gold?
Well, you all know that I'm hopelessly a gold person, and so here, look at this top left chart and look at what's happened since 2010. We've had this period of time, long period of time, where we've been in this trading range where there appears to be the diminishing volatility throughout. And one of the things that we've talked about repeatedly in the past is the year-end effect with gold, is that there's often important lows that come at the end of the year, and then once you get into the new year, gold is freed up to have a more important rally. And so here we have this classically, in 2018, we have this classic phase C test that's occurred. Now we're attempting to walk uphill. And so here, instead of going down into the end of the year, we've actually started to rally in the fourth quarter. And we're rallying up in a period of time when the gold market typically is flat to down, and making the final low into a new year. Well, now we have this market going up, which is contrary to the way it's been acting in recent years. It's going up, it's jumped up and out, it's had a good rally off the end of the third quarter, beautiful third quarter low, and then a good rally, and then a consolidation, and I'm looking at the bottom left chart, and then now it's jumped up and out, and it's attempting to hold up here. So if it can continue to do that in the new year, we may have a condition where gold can have a more important rally.
Mm-hmm. And I think that next session will also bring some of the gold stocks, because this is a very interesting sector right now for us and group. So Bruce, let's definitely look at those. One of the things that I'm looking.
Gold has, yeah, and I've been, as you all know, I've been trading gold and gold shares, and gold shares have really kept me out of trouble in the fourth quarter.
Mm-hmm.
Gold has been a great contrary counter trend kind of an investment, and it's just been a really valuable tactical tool for many people.
Mm-hmm. Well, looking at the latest potential reaccumulation rate here, I like the count, Wayne, that you're taking. So that suggests a swing trade to 112, which is great. And there are still some opportunities even to get into this position. We just need to understand tactically where we would be getting in, preferably on some kind of reaction and then resumption of the uptrend. I also would suggest looking at other gold stocks. There are so many that are showing bullish characteristics or are already in the uptrend. I thought that Bruce had was very important. Looking into the rally that gold stocks have had in comparison to the gold itself was a very interesting, important indication that the gold will have some kind of stop in action of the downtrend, and then resumption of the uptrend. So that's a really important point. Okay, let's go to the next one, Bruce. Meritage Homes from John.
Well, actually, I did a blog in the middle of the year on the home builders, and I did it on the ETF, and the home builders have really just been, you can see that they have been leadership to the downside in 2018. Look at this beautiful climax into December a year ago, and then a test, range-bound market, automatic reaction, secondary test, and then falls out of that. Well, and this is the crazy part, is notice this long trading range that's occurred where it's attempted to hold its price range while the market's been rallying. And then when the market started to really come off, because this is leadership to the downside, it had a more important decline that followed that. And so this is really a nice chart in how to be patient. So the idea here now, the one thing, the backdrop that we can turn to, and I'll have some charts tomorrow on this, is interest rates. And they're all charts you've seen in the past that I've done, but I've got higher yields ahead for the bond market. I mean, not higher yields, but higher prices, lower yields. And so the idea here that we have had an action in a decline into October, and then a attempt to rally, and now a test, an attempt to test here could very well be coinciding with falling interest rates, and that this could create a more favorable backdrop for the housing market. And it could very well be that, I'm kind of going off the rails here a little bit, but people, if they're starting to have bad experiences in the stock market, and they aren't able to make money from good uptrends or from speculating, they may start to reallocate their funds into real estate a little bit, somewhat. So there may be a migration here that John is picking up, where you're getting an attempt to make a higher low. I love this real high volume low that occurred at a higher level in December, and then it turned right off of that. And so I look at that and I see a lot of buying in that big volume bar. So a big spike and then attempt to turn up. And so this could very well be the change of character that sets up a more important rally. So I'm open-minded.
I like the rally here out of the low of the selling climate. It has a lot of institutional signature right there. And all of the next attempts to go down are somewhat muted. So that's great, that's bullish. But at the same time, I'm looking at where are we in the structure. And John, I think that you're correct here. I think this is phase A, and most likely we're probably in phase B here. So phase B would be characterized, with the volatility both to the downside and to the upside. And what we're not seeing here from this particular demand signature is appearance of institutional presence right there. So if the price goes up, it goes up just because supply is not that great anymore. So I think that's what's happening. So there might be some possibility that we could go up, stop here again, and then have another attempt to retest. And it could be just still at the higher level, somewhere here. And we could have that phase C as like a small spring below this low right here. So this could be one of the scenarios. So I would approach this tactically, trade tactically for now, and just start accumulating the position if you have a bias to the upside deliberately, and also, in tranches. So open up the first one and then look for the confirmation for that position. Once you get the confirmation, look for the second place to open the position, look for the confirmation, and only open the next tranche, when the confirmation comes.
Now, just a footnote. and that is that we see here that this is Meritage is in the home construction industry group. And what you'll want to do is go into your charting package and go into home construction and look for the best, strongest home construction stocks in the group, because you know that there are stocks that are leading the way higher here in the market. And you can see, if you look at this green relative strength line down here, the third one down, you can see that the green line is up and it's showing good relative strength to the S&P 500, which means that the group itself is starting to show at least near-term leadership, as is Meritage. But are there other stocks in the group that are also compelling from a leadership perspective? And so I would be looking for all the stocks that meet this criteria. I'm sure the Meritage is one of those. John's really good at picking the best stocks in the group. And so, but I'd look at them all. So, and I'm just suggesting this as an exercise for everybody.
Mm-hmm. Homework for John? John, why don't for the next week?
No, John, I'm sure John, I was trying to say John, I'm sure did this, but I'm saying homework for everyone.
But John, a homework for you for next session. Why don't you have like on one slide, 4 charts from this group of other stocks that you might be picking up, that might have better leadership characteristics. Let's see.
And also the other homework is, sorry, I was speaking over you.
Go ahead.
The other homework assignment is go back and look at the blog I did sometime around mid-year on the home construction ETF.
Mm-hmm. All right. All right, we are close to the end. This one is from Kevin, and this is CVE, an energy stock. And Bruce, looks like on the right we are might be experiencing some kind of spring type of action. What do you say?
Well, I think it's compelling that the volume into the low, which is just going down to the selling climax level and putting in that big tail on that last bar, the lowest bar, shows that there's a lack of will among sellers to push this down out of the support area and start a new downtrend. So I think this is very interesting. And so now what we want to see, as with all good springs, this is the volume here in this spring is lower than it was in November, but it's not low. And so because of that, we would describe this as a number 2 spring. Number 2 springs have to be tested. And so we would look for an attempt to test, come back down maybe to that $6.50 area or somewhere slightly above it, somewhere in there. And then from there, look for a change of character where it can move easily upward toward back into the middle of the trading range.
And we
this is very interesting.
Mm-hmm, yeah, and we kind of have that test already, Kevin, right? So look at this bar right here, and thank you for sending, a better look here on the daily. This is a very good bar. The initial morning action is to the downside, so there is selling pressure on that bar. And yet, by the end of the session, look at the recovery and look at how many bars have been overcome, the closes. And 1, 2, 3, 4. 4 down bars are overcome on the close basis. So very positive bar. Next day, there is a test. It's a local test. On the intraday, you will see this better. There is another test right here as well. So there were already a couple of opportunities where you could have opened, 1 or 2 tranches for your position. Now, what Bruce is saying is that we might have a more meaningful test of a larger magnitude where maybe we go to the downside and create a higher low just because supply was still somewhat higher. So we want to see a lower supply signature. And then if that's going to happen, then you're going to have an opportunity on the reversal. That's number 1. And then the second opportunity on the breakout right here. So a very interesting tactical situation at this spot. And also just analytically, I really like this decline. I mean, it looks ugly, but that's what's so desirable about this. It's just because the decline is ugly in the sense that there are so many attempts to sell, and we go down to the support, but it's very laborious. It takes a lot of time. So this is kind of like a very typical behavior on the reaction decline into potential phase C. And then we see how the price reacts as it goes below the support. So quickly recovers back into the trading range. And that's the characteristic and elements of a spring. Bruce, are we done?
A great first session. How much
Yeah.
fun was that?
Yeah, I would say, and such a good pace. So that was great. So let us remind you guys that for those of you who are not a part of our class, we would like to welcome you. We have a promotion that is going to expire at the end of the next session. So go to our website, wyckoffanalytics.com, and find the Wyckoff Market Discussion page. Sign up. We'll be happy to have you in our classes. We will be happy to look at your stocks, at your selections, and just work with you. Bruce?
We heartily encourage you and invite you to be part of our group. And we have the great part is come check us out at this special reduced rate, which is a legacy rate. It'll never go up. And join us, see whether or not we can add value to your trading. And if at any point you decide that it's not appropriate for you, you can stop at that point. But we think we'll add a lot of value to your trading. We think Wyckoff is an amazing methodology. We'll do a lot of point and figure work. And then the last thing I want to ask you, Ramon, is that two-part point and figure workshop that I did for Stock Charts TV, we're going to be able to put that up on our YouTube channel.
Yeah.
Yeah, so they've allowed us to do that. And so for those of you that are asking about that, you'll be able to stream it on demand here shortly, soon.
Yes, absolutely. All right, guys, if you have any questions, email us at wyckoffassociates@gmail.com. Thank you so much for being with us for the first session of the year. I thought that was a great session. Happy New Year, Bruce. Thank you so much for being here.
Thank you. Happy New Year to everyone.
And we'll see you next week. Thank you, guys. Bye-bye.
Thank you. Bye.